Did the stock market bottom today? Truthfully, nobody knows for sure, but I think there's a good chance it may have, and I'm going to jump around a lot tonight to explain why this is likely going to be the case. So open up your ears and clean out your eyes, because here we go. All right, first thing is TLT. We've been talking about the bond market, and I told you we really need to see the bond market cool down here, and that's exactly what it's doing, with 3 days in a row pulling back below a 200 daily moving average. So to me, this is good evidence that we are not getting into some panicking market that thinks a recession is coming. Otherwise, this thing would be going up in a straight line. So that's number one. Keep in mind, we are still bullish above 90, and we did get a bounce off of 90 today. So that's definitely something to pay attention to, but we're just not getting the huge inflows into TLT that you would see if we were going into some nasty sort of recession. The next thing I want to look at is Berkshire Hathaway. I talked about this before, how this was still breaking out and going on a very impulsive rally to all-time highs. Just 3 or 4 days ago, we made a brand new all-time high, and we haven't even retested the previous all-time high breakout yet. And we still have a bull trend here. So Berkshire Hathaway is still looking very bullish. And one of the most important components of Berkshire Hathaway and also the S&P 500 is the financial sector, which does have a sort of triple top look at the previous all-time high rejection. But again, that was only about 3 days ago that XLF had just made a new all-time high. And more importantly, it is now sitting right here at a very important support trend line. So if this is still bullish, we could easily start to rally off of this low and still go higher from here. Now, I'm not saying it has to. I'm just saying this is definitely something to pay attention to, because if it does bounce from this support, that is definitely extremely bullish for the S&P 500, because this represents the entire financial sector. The next thing I want to look at is SOXX. This is the semiconductors ETF. I had made a video prior on this about all of the semiconductor stocks, and I did mention that we were getting the possibility of this lower high rejection. If we broke down below 210, I was going to be looking for 198. And you can see as of today, we have had a double test of 198. And the reason I bring this up is because if we hold 198 here, it is a possibility of a double bottom, which means we could get a very bullish breakout. And the number one holding in the SOXX ETF is called Broadcom, which is ticker symbol AVGO, and it is sitting right on top of a rising 200 daily moving average of support at 179. And at the time of making this, after hours, they just reported earnings. They smashed their earnings, and they also raised guidance. And as of the time of this video, they are currently up about 16% after hours, and that is the number one holding in the SOX ETF, which is obviously extremely bullish for this whole entire ETF, and that could send prices higher as well. So when we look at the broad market and we look at SPY is also bouncing off of a rising 200 daily moving average if we can hold this support. And I previously talked about this being a very powerful bounce coming to the stock market, and I still think that's the case. The only difference would be maybe this is a bottom and we don't actually come back and break down to a lower low. Now, the other reason this is likely going to be the case is because sentiment readings are through the roof on bearish sentiment right now. Just to put that into perspective, we have the same amount of bearish sentiment that we had 9 months into the 2022 bear market. And if you look at the chart right here, we are only down as of today's close 6.6% from the previous all-time high at SPY. And we have the same amount of bearish sentiment that we had 9 months into the 2022 bear market when we were down over 20%. So if you believe in sentiment readings being a contrarian indication, the contrarian indications right now are telling you to be extremely bullish while everybody is fearful, sitting right here at a rising 200 daily moving average on SPY. Now, on top of that, if you look at the VIX has also spiked, and the VIX is currently out here above 24. And when you get the VIX spiked readings, put premiums are extremely high, and a lot of people are buying puts as protection to the downside. And those puts do have an increased chance of expiring worthless, as moneymakers are selling those puts as insurance, and they want to do their best to guarantee those puts expire worthless. So as you see the VIX spiking higher, that is giving us more and more indication we're getting near a very important market bottom low. And even if we're not at a market bottom low, I still think it's enough for a very powerful bounce, even if it wasn't a bottom and we still continue to go lower. I think you're just very close to a very tradable bounce with a very low risk support zone right here, right around SPY 570. So watch SPY 570. That's a very critical support. If we can't hold that, yes, it is possible we go lower towards 560, but I just think the odds are extremely low that we go lower unless we get a very powerful bounce first. And I think the odds are actually increasing that the powerful bounce may mark a bottom and we may never come back. So above 570, if we start to bounce, you're looking for resistance right around 580, 584, and then above that, we should have a smooth ride higher towards 594. On the NASDAQ 100 triple Qs, we were down 2.75% today. And again, there's a very good chance we could have hit a bottom today here in the triple Qs. And this is also going to be a bounce off of a rising 200 daily moving average of support, which is anywhere between about 488 and 493. This is where the buyers have been showing up. And we need to see the buyers push higher, break the resistance above 502. That could look like a double bottom breakout, which would then easily take us higher towards this price target up here right around 516. Again, it is possible after that bounce, we could still turn around and come back lower, but I think the chances are increasing when we're putting in a bottom before a summer rally. So focus on these critical support zones. It is extremely easy to manage risk down here because we're at very critical support levels, meaning you know exactly when to get out of your trade if it starts to break down and the risk is increasing. But right now, I think the bears are trying to short the hole, and I think they're going to get it wrong yet again. And I just think this is a pullback within a bull market that is still trying to go higher. We'll find out very soon. No matter what happens, always manage your risk. Don't throw all risks to the wayside. Anything you think could happen is definitely something you can trade as long as you have a plan to manage risk. But do not for 1 second think you're just going to blindly buy some short dated options and hope to get rich. That just doesn't work in the long term, and eventually you're going to lose all your money anyway. If you want to come trade with me, the best way to do that is TSC Trade Alerts, where you get all of the buy and sell alerts for the exact percent allocations that I am taking for the TQQQ or the SQQQ. You can find out how to join by clicking on the link in the description of this video. So thank you for watching, everybody. Now go crush this market.